And we are live, guys. It is an absolute honor. We have Scott Melbye on the show. Welcome, Scott.
Well, Larson, it's great to be on the show. It's really exciting to talk about uranium and energy and where it fits in the mix these days. Very exciting times.
Yeah, and if anyone has lived under a pitch blend rock for the past 38 years, let me bring you up to speed. So Scott Melbye is the President and CEO of Uranium Royalty Corp, President of the Uranium Producers of America, EVP of Uranium Energy Corp, advisor to the Nuclear Engineering Program at Colorado School of Mines. There's more, but if I say something wrong, you can correct me. And before that, Mr. Melbye here served as President of Cameco Inc, the subsidiary responsible for global marketing and trading activities, with annual sales over 30 million pounds of U3O8 uranium. And it's a total of 38 years of experience in the uranium industry. And he has been the Vice President Commercial for Uranium Participation Corporation, which is now the Sprott Physical Uranium Trust. And you've been advisor to the CEO of Kazatomprom, the world's largest uranium producer, and you've been Executive Vice President Marketing for Uranium One, responsible for the global uranium sales activity, and you have 22 years with Cameco Group. Did we get it approximately right?
I think you covered it. If you go even further back, there was involvement at buying uranium at a nuclear power plant in Arizona and trading and brokerage of uranium with a German trading company. But it's really, it's been an exciting, 39 years now in uranium and nuclear energy to have that kind of perspective on the commodity as it's cycled and nuclear energy as it's ebbed and flowed and gained in public acceptance. It's been quite a career.
Yeah, indeed. And I thought to start off like this. Over these 39 then, rather than 38 years, what's your biggest learning about the uranium industry? That could be a valuable. Yeah.
Yeah, I mean, I think why we value, people, older people in our society and in business and on board of directors, and we look at their years of experience. I think it's really valuable to have gone through all the various cycles of uranium when, nuclear energy has been growing and expanding, or if it's contracted, and just learning the commodity cycles. And I think this would apply to any commodity, whether it's gold, silver, copper, anything else, is just understanding that with, running mining companies, it's not always what defines a successful mining company is when the commodity price is at an all-time high. It's kind of the analogy is to farming. I mean, it's too late to plant more crops, at harvest time if the prices are up. And so I guess the biggest thing I've learned is embrace the downturns in a commodity and take advantage of that, where assets can be acquired for 10 cents on the dollar. You have the luxury of time to permit, license, and build these operations. And then when the markets turn, and they inevitably will, commodities all cycle, you've got companies that are positioned to really capitalize on the good times. And I feel like this has been a strategy that we've engaged in the companies that I'm involved in now, and it feels very exciting as we're going into what is probably the best and sustained bull market that we've perhaps ever seen in the uranium industry.
So, yes, I wanted to touch on that. Over this perspective, how has this industry changed? How has this market changed? And where are we now in kind of looking back over these almost 4 decades?
Yeah, well, if your audience are commodity investors, they're used to the downturns, the cycles, the bull cycles, and the bear market cycles. But I have to say that uranium went through a very long and grueling 10, 11-year bear market after Fukushima, where the events in Japan really caused demand to decrease. We had a temporary kind of slowdown and stoppage of construction. Some countries like Germany moved away from nuclear altogether. Japan has been very slow to restart. But what we've seen now over the last 11, 12 years is a realization now of where nuclear fits and where energy fits in our society today. And I think that's been, one of the biggest drivers is we've gone through a massive energy transition. We are transitioning to a greener energy economy. That's a noble and very correct objective that we should be striving for. But the way we've gone about it, kind of pursuing more ideology and less math and science, has really caused us some enormous problems. You can look at Germany, California, Texas, South Australia, where we're really in an energy crisis at a time when our society is needing more and more electricity, and especially a lot more if we go to electric vehicles. And so uranium and nuclear energies fit in that because it's really, in contrast to wind and solar, which at best run 30% of the time, and they are carbon-free, which is great. But nuclear power is as carbon-free and safe as wind and solar, but it runs 95, 100% of the time, 365 days a year. So, this has really changed public perceptions, political perceptions in the United States, in Europe, not everywhere. Germany's still resisting it, but pretty much everywhere you look today, countries, regions, states and provinces are all turning to nuclear power to be a baseload core of their clean energy and reliable and affordable energy. So it's in that context that the uranium market fundamentals have really changed dramatically, really over the last 3 or 4 years now, and really entering the first stage of a bull market. And happy to go into some of the dynamics of that.
Yeah, we will do that. So just to conclude on that point, so over these years, where would you put today's situation in terms of regulatory or nation acceptance to nuclear power? Is it the most it's ever been, or is it in the middle, or is it still negative, or where would you put today?
Well, I think it's probably going into a period where it's the highest it's ever been, because we've been through bull markets in uranium, and we've seen nuclear energy growth. I kind of looked to the 2005 to 2010 period where globally we were building nuclear power plants again. I mean, the first initial buildup was obviously in the 70s and 80s. But in those periods, we still had half the world against us. The political right tended to support nuclear energy. The political left was violently opposed to nuclear energy and tried to stop us at any stage. We've gone from that now to, because of the carbon-free, reliable baseload aspects of nuclear power, in my country, the United States, Democrats are as likely to support nuclear energy today as Republicans. And you're seeing it as well in the European community, where nuclear has now been accepted as in the taxonomy discussions as a sustainable, green energy. And that has big impacts, because in the past, and I look at the way nuclear energy was treated in the past, and it's very much the way the oil and gas industry and coal industry is treated today. Those are industries that exist in our economies, and they're heavily regulated, but the opponents are using the regulations to really squeeze off and in some cases put those industries out of business. That was the case with us. The regulatory bodies that licensed the permitting and construction of new nuclear power plants were heavily influenced by the political left to either slow walk, impede, or obstruct nuclear power plant construction. Now, as we go into this next cycle, if the political left is as eager and in some cases more eager to have green energy put on the grid so they can finally move away or diminish need for fossil fuels, I think you look at the regulatory climate could be much more supportive. I don't think you cut corners in terms of safety or regulating in the public interest, but I think you lose that obstructionist kind of approach to the growth and building of new nuclear power plants. And this will be very important, as and we'll talk about small modular and advanced reactors, which are such a big topic right now.
Yeah, and I mean, when we're looking at this from an investment perspective, trying to understand where these things are going, of course, that's a huge clue to where the markets will go as well. And I mean, but before we go into that, just I feel also that what's the alternative? I mean, the as an engineer, the problem to get those CO2 molecules out of the air and put them back underground, that's a very difficult problem to solve compared to perhaps recycling the energy fuel from uranium power plants. But yeah.
Yeah, I mean, did you see it in Europe? I mean, the classic example was Germany's Energiewende energy policy, which 10, 15 years ago decided to move away from fossil fuels and nuclear energy and rely heavily on renewables. And now, 15 years later, where is Germany? Germany has electricity costs 60, 70, maybe 80% higher than neighboring France, which is over 70% nuclear.
Yeah.
Germany is achieving higher carbon emissions than they did before they started this whole practice, and they've been very preachy to the rest of the world and the developing world on needing to lower their carbon emissions. And Germany has made has had no success whatsoever in lowering, and they're actually expanding their use of coal in Germany today. And then perhaps the most appalling is kind of the way it's constrained Germany's ability to respond to Russia's invasion of Ukraine. The reliance on Russian gas today, which is going to be a painful step for Germany, as you see over the cold winter, to move away from. But nuclear energy clearly would have really mitigated a lot of the impacts that Germany's facing today. So we know what it looks like. If you want to go green energy without nuclear power, look no further than Germany. But the good news is most countries are recognizing the role. I mean, Central Europe, huge growing market for nuclear power. As they move closer to the European community, they have to phase out their coal-fired electricity generation, but at the same time, they can't rush into the arms of Russian gas. So it's not surprising countries like Poland, Romania, Czech Republic, all through the region, you're seeing reactor growth, small modular reactors, and large reactors.
Yeah, so thanks for that introduction, and thanks for agreeing to share all your insights here. We have prepared some questions. I hand over to Mark Coops, who you all know here on the channel. And let's go through them one by one, and then as you come on here you can ask questions as well in the chat and we'll bring them up. But Mark, please take it away.
Excellent. And again, Scott, thank you for your time and good to see you again. Maybe before we go in more details in terms of the discussion about the market dynamics and all of that, why don't we take a step back? I mean, you founded Uranium Royalty Corporation. You are an EVP in UAC. Let's talk a little bit about both of those companies. We all know royalty companies, let's say from the gold and silver industry, for example. I know that Uranium Royalty Corp is the only royalty company within the uranium space. Could you maybe share why you started the company, give an overview of that company and some of the royalties you have acquired and some of your future plans as far as you can share?
Sure. Well, we founded Uranium Royalty Corp and took it public in late 2019 on the Toronto Stock Exchange and then listed on the NASDAQ exchange in the US a year and a half ago. But we basically looked at the success of royalty and streaming companies in base and precious metals. We looked at companies like Franco-Nevada, Wheaton Precious Metals, Gold Royalty, and number of royalty companies that have emerged as pure play, diversified investments that investors have really, really flocked to, and that category of investment has done very well. In some cases even better than the mining companies themselves. It's also become a very attractive source of development capital for miners and developers. We all tend to think of debt and equity as a way to finance a new mine development, but royalty and streaming's become, I think it's transitioned from being an alternative financing to really stream. So we were amazed that no one had done it in the uranium space. And maybe it was because our industry was not exactly in it growing. We were encouraging mine production to show discipline and come off the market to work off oversupply and inventories that we were facing in the market in that bear market. So maybe it's not surprising. But now as we go into this next maybe super cycle in uranium, there'll be billions of dollars needed in investment in new mines in Africa, Australia, Canada, the United States. And we want to be a source of that development capital for that next generation of uranium mines, and at the same time provide a very attractive, diversified way for investors to invest in the nuclear energy story and be very exposed to the underlying commodity of uranium. So as we've launched, we have 18 royalties today in some of the world's biggest, best mines in Saskatchewan, Canada, with Cigar Lake, McArthur River. We've got interests in a very proven large producer in Namibia and Southern Africa with Langer Heinrich, and we're invested in a number of U.S. operations, particularly in situ uranium operations in the United States, with projects of UEC and Peninsula Energy and Encore Energy. We believe that in situ mining can be not only very low cost, low capital cost, low operating cost, but environmentally very friendly way to mine uranium, which is important in an ESG social responsibility world that we're in. And we do run all of our projects through such a filter to ensure that we're holding very high standards in terms of ESG and social responsibility. So it's exciting. We've also taken a very significant interest in physical uranium. Because it's taken, we're only been public now for a little over 3 years, but we're only now seeing cash flow from a number of our mines start to crystallize in 2023 and 2024. So for the early investors, we really wanted to expose them to uranium, the commodity, which was coming off of the bear market lows. And so we've acquired over 1.7 million pounds of physical uranium, stored it, warehoused it, with already a very nice capital appreciation on that. And we have other streams of uranium coming in from companies like CGN, the Chinese company that operates the Husab mine in Namibia, having future streams of uranium coming in as well. And that's a nice asset for us on our balance sheet, but it also is a source of cash should we need to make investments in new royalties and streams. We have almost $100 million worth of uranium on the books that can be a source of capital for new deals. So very excited on that front. The company was founded in part by Uranium Energy Corp, which is a 14% shareholder. I'm the executive VP of UEC, that's traded on the New York Stock Exchange. And it's the fastest growing uranium company in the world today. It's really focused on North America, stable jurisdictions. We've made close to $600 million of investments in the last 18 months to triple our resources in the ground, quadruple our licensed production capacity, and couldn't be in better places. We have a Texas hub and spoke of operations. We have a Wyoming hub and spoke operations, and now we're developing a production pipeline in the rich, exciting Athabasca Basin of Saskatchewan. So in a world which is really influenced and impacted by geopolitics, obviously Russia, Ukraine, and who knows what happens with China and Taiwan, we're very happy to be in safe jurisdictions, great geology, great regulatory environments, and we'll focus our energies there. We'll let others develop the mines in Africa or Central Asia, but we're a North American focused company. So between these two companies, both pure plays in uranium and a great way to invest and get that exposure, but very different. One is a diversified global company, diversified global risk, and the other is very much focused on uranium mine development.
Let's take a few questions here from the audience. And let's start lighthearted. From Ivan on Tech, who has a huge YouTube channel. Hello, Ivan. Great to see you here. Is uranium better than altcoins? That means cryptocurrencies in the next bull run. And what we can say here is that in the previous cycle, many of the uranium companies had enormous appreciation, maybe more than many people know if they haven't studied this sector before. There were many companies that went up 10x 100x
Yes.
and even 1000x in the main, in the, so to say, first bull run of uranium. So Ivan, it can absolutely compete with altcoins. Let's take another great question here from Espen Folmo, PhD. Would you say holding URNM and URNJ would be a sufficient decent exposure to UEC, or would you recommend specific stocks? Of course, hard to answer in detail, but what would you
Yeah,
say?
no, I think it's an excellent question, and I'll answer from my own personal investing, where I like to hold ETFs on sectors that I think will do very well based on the mega trends, geopolitical trends, everything else. So, for example, if I invest in an aerospace or aerospace ETF, I may hold that ETF, and then I'll sort of turbocharge my exposure to that sector by picking 2 or 3 stocks that are already in that index, but I think will be companies that outperform the others in that index fund. And so with the uranium ETFs, those are excellent ways to get exposure to broadly, all the companies in the space. But then I would encourage, to really turbocharge your gains with the market that we're going into. Give yourself some, pure exposure to the miners, whether it's a smaller or mid-cap miner or a larger cap, which may be a more stable investment, maybe less exciting, but more stable. Look at royalties as a way to be kind of different from the mining equities, as opposed to, Sprott, which is pure physical exposure. But again, I think it's a good idea. Go with the ETFs and then pick 2 or 3 stocks that turbocharge your gains. And I hope you pick URC and UEC as at least 2 of those.
Exactly. Let's take another question. How is Bill Gates' attempt to create small modular standalone nuclear power generators going? Are you optimistic about this area R&D? And we kind of had prepared that question. So before prefacing it a little bit, I saw someone wrote on Twitter a week ago or something that he was so surprised that we kind of created nuclear reactors that you could put on a submarine, so the submarine can stay underwater for like 30 years, but then we decided to not use it for anything else. And he said, how could we end up in that conclusion?
Yeah, well, we're very much going into this era of the small modular and advanced reactors. It is probably not just an exciting story for nuclear energy, but energy in general, because these are not the 1,600 megawatt massive reactors, which are continuing to be built at very robust growth rates. I mean, we've added 66 large reactors around the world in the last 9 years, but we've got another 58 of those under construction. So even if the story just ended there, we have 3 to 4% annual growth in nuclear energy and uranium requirements. But now we're beginning to see the first wave of the small modulars. These are the 50, 100, 200 megawatt reactors built in a factory, shipped on site. And again, they are very similar to the reactors that you would have in a submarine or aircraft carrier. We have 104 of those in the US Navy and aircraft carriers and submarines, and they've operated without radiological incidents since Rickover's start of the program in the 1950s, and that's been through the Cold War, under the Arctic and the Persian Gulf. If a sailor can sleep on the other side of a steel wall from a reactor under the ocean for 4 or 5 months at a time, pretty sure we can build them on land. And that is one of the advantages, even safer than the existing reactors, which is hard because nuclear energy has had the best safety record of any energy source over the last 60 years. So we can't lose sight of that. But these are even safer, even walk-away safe in terms of the control systems and just being smaller. The exclusion zone that you might have around a reactor in this case could be the fence line of the facility itself, and enormous applications, whether it's on grid to provide flexible energy to kind of complement grids that are heavily I would say burdened by renewables because they're so unpredictable and intermittent. You need something that can run 24/7 or kind of scale its operations to load follow with the renewables. So on-grid applications, off-grid, remote communities, island communities, petrochemical plants, mining operations, all are looking at using these small modular reactors. So back to the original question, Bill Gates, and it's not surprising that we have a lot of tech leaders, who have done the math and science on our energy transition and realize we have to have a significant component of nuclear energy. The TerraPower reactor has been designed by Bill Gates' company, and its first demonstration project is going into the state of Wyoming. Interestingly enough, sold to his friend and fellow billionaire Warren Buffett, who operates Pacific Corp Power, which is a Mountain West power supplier. But in this case, the state of Wyoming, which couldn't be a bigger coal mining state, even there they've decided by the end of the decade to phase out their coal-fired power plants, or a number of them. And so for one of these plants in southwestern Wyoming, they've decided to replace the coal-fired power generation with this small modular advanced TerraPower reactor. It's slated to come online by about 2030. And, I think it's really gaining a lot of interest because we talk about the energy transition and the impact on societies and communities. If you're in a coal mining and coal region, it's a little disingenuous to say, well, we'll shut your plant down and you can make solar panels because, frankly, they're made in China. But in this case, there is a transition of the workforce, construction-wise, operating-wise, even in the mining of the fuel can occur in Wyoming. So it's not surprising other states like Idaho, Washington State, we're even looking at X-Energy citing their first small modular reactor with a Dow Chemical petrochemical plant on the Gulf Coast, and NuScale going into Idaho. We've got GE Hitachi with their own designed small modular reactor going into Ontario, Canada. Will probably be the first one to come on in 2028. And then countries like the UK, with Rolls-Royce looking to add as many as 16 of these small modular Rolls-Royce reactors in the coming years. So it's very real. It's very scalable. It could be revolutionary. And if we can deploy these like gas turbines, we have an answer to decarbonization without sacrificing our energy reliability and security.
Yeah. I mean, it is clearly, it's one of the biggest questions of our lifetime, and I agree with you. Most tech leaders who say Elon Musk or someone, even though so much into solar solution, he is still positive to nuclear energy. Let's take one more big industry question, then we proceed with the more financial questions. Espen again, is cold fusion, do you see that as a challenger to nuclear reactor? This has been on for a long time, since I was a child.
Me too. I'm 60 years old, and fusion has always been just around the corner. But not only just with fusion, but any sources of innovate. Like, we need to innovate. We need to engage in research to find any way that we can to generate reliable, affordable, and clean energy. And so if fusion has a role, of course we should continue to fund the research and move in that direction. It's just been so difficult. We can show that we can create energy from a fusion reactor, but in many cases it takes more energy to create the energy that it's produced. And so recently we've seen just a nanosecond where there's been more energy produced than was input into the process. So that's an encouraging step. But I think as we go forward, 50, 100 years from now, we're going to need every source of energy that we can get our hands on. Society, it's nice to talk about conservation. I don't believe in energy conservation. I believe in energy efficiency. We should make the best use of energy that we possibly can, but economies grow on energy. If we go to electric vehicles, we have to, in many cases, 50% increase or double our electricity generation. Our society is more electrified, more computerized. All of the things that we enjoy in life, kind of come back to electricity as an energy source. So we need to figure out new and different ways. But I'm not worried that in the immediate term that is a big challenge. But I'd be happy to see it emerge in the coming decade.
Thank you for that great answer. Let's continue with the questions, Mark. Let's dive more into the finances of this.
Yeah, well, maybe just before we dive into it, can you just summarize, Scott, the main market dynamics really impacting the price of uranium at this point? Where are we? And you already outlined that you're extremely bullish, obviously, and we all are, but maybe for the audience, can you summarize it?
Yeah. Well, I mean, I think any commodity is defined by the nuts and bolts of the supply and demand analysis. Uranium's no different. So, let's set aside this enormous megatrend to green energy, very positive and driving the underlying demand. We also have the geopolitics of Russia, Ukraine, which are really highlighting the importance of energy security and not relying on countries for critical minerals or our energy security, on countries that don't share our values or interests. That's becoming clearly evident. So those are big mega trends and issues impacting our industry positively in the case of nuclear energy. But if we just look at supply and demand, after Fukushima, we saw the demand impacted negatively. We continue to see uranium production continue at a very high level, and that explains something that's very different between uranium and, say, copper, gold, or silver, is we're a very inefficient market, and there's extreme lag times to market and price signals. In copper, if you have a major strike at, say, the Escondida mine in Chile, the next day the copper price will go up. In uranium, you tend to have a lag time because we have so much of what the utilities buy from uranium producers is under hedged contracts. So even though the spot price is falling, producers are still getting a higher price and continuing to produce, and in some cases overproduce into the market. And that was the case in our last bear market, where even though prices had fallen from $70 all the way down to $17 between 2010 and 2016, we had oversupply and we were just adding to the inventories. What happened in 2017 is when the hedges started to fall off the portfolios of producers and utilities, mines started cutting back and were able to show discipline in production. That's created a gap where we've been producing anywhere from 50, 60 to 70 million pounds a year less than what we've been consuming annually. And the world consumes about 190 million pounds of uranium annually, going to 200 million. But currently we're only producing around 130. So that's a huge draw on the secondary supplies and inventories, which really needed to happen. And if we were having this call, this interview 2 years ago, I would have said, be patient, the market's rebalancing, this gap is drawing down the inventories, so we're going to get to a rebalanced point here in the near future. Well, something happened along the way called Sprott Physical Uranium Trust and other entities like Uranium Energy Corp, URC, others, Yellowcake, all viewed uranium trading at $20, $30 a pound as an enormous value. That's way below the production cost that anyone can achieve anywhere in the world. And here you could buy it in the drum at a warehouse where the utilities buy the material and introduce it into their fuel cycle. So Sprott and others bought tens of millions of pounds off the market. Sprott alone has sequestered about over 60 million pounds from the market. And that just accelerated the rebalancing to a point now where in 2023, we can say with confidence we have transitioned, past tense, from the inventory-driven market to a production-driven market. And we have not been in this situation for decades. And I think it's interesting to see because a lot of people in the industry have never been in this market and seen what that looks like. But if you're an economist, you don't want to be in an industry that's inventory-driven because the price formation is determined by the marginal pound that can meet the demand in the spot market, and an inventory may have a zero cost basis to it. But now the marginal pound to supply the market is more likely coming from a produced pound, and that has cost of production, it has lead times to production, it has existing contract commitments and availability of supply. So I think we're going to have a much more exciting uranium market now where as we introduce more demand and more purchasing, we're going to have less supply and real scarcity, if not a supply shock. And many are pointing to 2024, 25, and 26. And it's interesting, why am I so specific with that? Even the utilities that I meet with say they're not seeing any supplies from producers in that time frame because they're either fully committed under contract, or if they're coming into production, they're not fully able to produce in the market. And this is this inefficiency that I talked about in uranium. It's horrible when the uranium market's oversupplied. It's wonderful when it's undersupplied because that inefficiency tends to accelerate price movements. And so we've had periods of time in the uranium market where spot prices have traded over $100 a pound, even though the market clearing price, should be theoretically much lower than that. And so now we're, if you were present in the last bull market, Larson, you mentioned the enormous wealth that was gained by uranium investors during that period. I think we have all the same ingredients in this bull market, only better. Better public acceptance, better political support across parties, very little inventories. We're really going into a period of enormous growth with no inventory. If there's any shock, like, for example, the world's largest producer is Kazakhstan today. America, of all places, gets half their uranium from Russia, Kazakhstan, and Uzbekistan. And with what's going on in Russia today, that's very alarming. And as is the case, they've had difficulty exporting through Russia to Western markets. It took all year to get one shipment out an alternative route through Armenia, Azerbaijan, the Caspian Black Sea route. And I also think that if Russia is under global sanctions, the strategic resources of uranium, oil, and gas in Kazakhstan are first priority for them. So I don't think that they're going to allow much of any uranium to export from Kazakhstan. I think the only other country that will have a claim to those resources will be China, who Kazakhstan also shares a border, and China is the fastest growing market in the world for nuclear power. So we have a huge producer in Kazakhstan that produces half of world production, but much of it may not make it to Western markets in Europe, North America, or Asia. And so that's a real big consideration. We could have real regional shortfalls. And it's not surprising utilities are beginning to contract very heavily. So a lot of the tier one available production that can contract today is getting fully committed. Even major producers like Cameco have been contracting at record volumes. They just signed a contract or came to an agreement with Ukraine to move them away from Russia and signed a contract which could be over 3.5 million pounds a year for 12 years. Well, that commits a lot of that tier one production, hence why I'm so optimistic about new mine production. So whether it's Uranium Royalty Corp investing in mines in Africa, Australia, US, or Canada, and being their financing solution to get them into production, or it's UEC who have the mines, a couple of the mines that will be meeting that demand in Texas and Wyoming. It's a very bullish time. Uranium prices today are around $50 a pound, which is much higher than the $17 a pound we saw in 2016, but it's still below the incentive threshold for even the world's best mines, which may have a threshold around 60, which is a threshold that UEC and other producers that are really competitive, that have available near-term production, have mentioned, but there's not a lot there. I think to bring on big billion-dollar plus mines and mills around the world, $70, $80 is probably a more realistic threshold. So we have the makings of a very classic supply squeeze, and if it's coming in 2024, we all know how predictive markets can be. I wouldn't be surprised to see the uranium price appreciate considerably over the course of this year.
Excellent, Scott. And I know that there are already some questions here from some of the viewers. And Larson, before I hand it over to you to go over those. One question, Scott, which is very much linked. You mentioned already the spot and the term market, and the spot market being around $50. And can you share maybe a little bit more details also about the term market, because it's a very opaque market. There is practically for the individual no visibility into that market. Like, what is happening in the term market at this point in time?
Yeah, so utilities in the nuclear industry have largely relied on long-term contracting for, I would say on average about 75% of their needs they would put under long-term contract. And a long-term contract in uranium can be either a base price that's escalated by inflation indices at some hedged level, should be typically higher than the prevailing spot price, or they sign contracts which are market related, but they would have floors, ceilings, and maybe a discount off the market at the time of delivery. So they have been contracting very aggressively under these base price and market related contracts, and producers have been, with available production, have been engaging in that. And I would say some producers are getting to a point where their bellies are beginning to be full. And so there is a strategy of companies like UEC to not be that anxious. And in fact, we would be content to sell all of our production into the spot market. That could be on short-term deals that are linked to market without the discounts and ceilings, or straight spot sales to traders, producers, utilities in the spot market. And I think by doing that in an undersupplied, constrained market going forward, we can probably achieve the highest average selling price of any producer in the world going forward. And again, the confidence that comes from, we're not in an oversupplied market where that spot strategy would be less than attractive. But going forward in the next 10 plus years, we see that as a really exciting strategy. But hey, some producers need those long-term contracts to underpin their decisions to spend capital to go into production. And so we totally understand the strategy to hedge or lock in those volumes. We just, at Uranium Energy Corp, are quite happy to kind of hold our production back and sell into the scarcity that we see coming in the coming years.
My question was related. Do you think we will see diverging prices in the world, that we will have one price in the West and then another price if it's mined in the wrong place, so to say?
I think it's entirely possible that we have a bifurcated market where there will be the Russian kind of sphere of influence, and it'll be interesting to see which countries end up in that. But I could see Russia, China, maybe India, Iran, countries like this that have their own market and would have their own market fundamentals, whether it trades at a discount or not, probably to the Western unrestricted markets, but it entirely possible. And it remains to be seen where China fits in this, because God forbid that we need another Russia-Ukraine, but Taiwan, is very vulnerable these days, and it's not inconceivable to see China under sanctions like Russia if they go the same path. And then you have a situation where if you're in the West, if you're in Europe or North America, you need uranium production which is not encumbered by Chinese or Russian ownership. If you're in China or Russia, you need uranium supplies that are not encumbered by EU or North American ownership. And so that's where you would likely get a bifurcated market.
Very interesting. Leaders of the world, I hope you're listening, because this will have profound impact actually on the world, as I think many people were shocked to wake up and realize here in Europe only last year when it suddenly got cold in Europe. Let's proceed. Mark, you can continue.
There was an interesting question here on the chat, and we were going to talk about the same thing, but Scott, can you share your thoughts about nuclear waste? What quantities of nuclear waste are we talking about? How is it being managed? What can we do with it? Is it safely stored or not? I see a lot of questions in the chat and a lot of concerns from the audience in regards to nuclear.
Absolutely. Well, often nuclear waste is pointed to as an Achilles heel of nuclear energy. And I guess I would like to differ with it because we have good options in dealing with nuclear waste. Oftentimes it tends to be more political and less scientific, but very real. But let's back up and look at how the industry has dealt with its waste since the advent of commercial nuclear energy in the 1950s. Is I can't name another industry which has kept and controlled and kept safe from the environment every gram of waste that we've ever generated over that period has been contained. It hasn't been pumped out a smokestack. It hasn't been dumped in a river or lake or stream. We've kept every gram of spent fuel. In the United States, of all the largest nuclear energy program presently and historically, all the spent nuclear fuel since the 1950s in the United States would fit on one football field, 16 feet high. So that gives you an idea of the scope of the challenge. It's not overwhelming. It's certainly manageable. But the two options are either geologic storage of that waste in geologic formations that have remained stable and unchanged for, in some cases, millions of years, or going to reprocessing, where Larson referenced it. There's still maybe 80% of the energy still in the spent fuel. And so there's France has embraced is the reprocessing or recycling of those fuel rods into new fuel rods. And so that's a very attractive, and it's kind of surprising in society where we recycle everything that it's not more widely accepted. And I think it's because fresh uranium has been so abundant and affordable that it's really, that reprocessing step has been cost prohibitive. But then that brings, maybe there's a third path, which is monitored retrievable storage. Maybe we shouldn't bury it permanently in a bedrock formation, and maybe we don't all have to reprocess tomorrow. But if we can store it in a form in these spent fuel casks or containers, which are incredibly robust, there's nothing you can do to them. You can crash an airplane into them, light them on fire, you can do anything you want to them. You store the fuel in those containers, and you can store it underground if we want to take that extra step. But then in 50, 60, 70 years, we want to go back and reprocess that fuel. It's no longer a waste. It's an energy asset. So that's kind of the three alternatives that we have, which are all three good alternatives. But you do need political will to move forward with it. I know in the Scandinavian countries, you've been more pragmatic in Finland and Sweden at building out the geologic repositories, and obviously that needs to continue.
Yeah. I just feel as an engineer, it seems a giant mistake to seal it up permanently, because technological innovation tends to continue. So maybe in 100 years, we come up with better ways to efficiently utilize the remaining 80%. And then it seems like a huge mistake if we sealed it up permanently 500 meters under the ground. There will be maybe more work to mine it the second time than it was to mine it the first time. It seems smarter to kind of leave a door there.
Yeah.
So that,
and there are a number of companies now, it was really, I think it was going all the way back to Jimmy Carter in the 70s that decided to move away from reprocessing in the US and go to permanent storage. But now we're seeing a number of companies really taking either old technologies updated to current, as you said, all the technological advances we've seen since the 70s, and coming up with new ways to reprocess and convert waste to energy, fuel, and assets.
And I understand it's a difficult decision for politicians also. They're not subject matter experts, and they need to take the decision. If you sat there and you had to take the decision, which of these three would you pick if you had to decide?
I think monitored retrievable storage is the right. You can store these casks underground, so they are truly away from the elements and any sort of threats that you could have there, but they're easily retrieved and go into that reprocessing economy, which will likely emerge in a couple decades.
Yeah. We have some members of Swedish Parliament that's watching here sometimes. So if you're here and listening, there you heard it. Let's proceed. Mark, you can take it away.
Yeah, no, I'm not sure if there's some other questions from the audience, Anders.
We have a couple that came up previously. And I think the one that people really want to know is probably two questions. One, would you be able to share with the audience anything about how you constructed your own uranium portfolio, like on a high level?
Yeah, so at Uranium Energy Corp, it was easy. We wanted to be involved with in situ mining, which is very different from conventional mining. We're not anti-conventional mining, open pit underground. The world needs mined commodities, especially the green energy economy, and our high-tech economy needs mined minerals in the conventional sense. But in many parts of the world now, like I think 50% of global production is mined by in situ recovery, ISR. And it basically is almost a natural method. It extracts the uranium from sandstone ore bodies by reversing the natural process that got it there in the first place. So through geologic times, millions of years, minute particles of uranium were traveling in groundwater and passing through the sandstone. But in some cases, having some sort of reduction process that's happening. Sometimes it's the hydrocarbon gases that percolate up from below and cause the uranium to go from solution, oxidized, to a reduced state. And if that happens over a million years, you have uranium accumulating into deposits. So what we're doing today in South Texas and Wyoming is going in and oxidizing a solution that oxidizes the uranium, pumps it to the surface, and we extract from the water the uranium through ion exchange, and then we process it into yellow cake under the more conventional methods. So we like it. It's low capital cost, low operating cost. It can be competitive with much bigger mines around the world with higher grades. So that was one criteria, is that we pursue ISR mining. The other is good, safe jurisdictions with strong regulatory, strong judicial systems, strong health and safety. And hence why you find UEC in Saskatchewan, Texas, and Wyoming. Those are probably the three best jurisdictions in North America. With uranium royalty, we're casting a net much broader, and we're looking at companies that a good royalty company is going to have near-term, mid-term, and longer-term royalties. Some royalties we may not see cash flow for 10 years, but could be significant cash flows when a mine is ultimately developed. I think of Rough Rider deposit in Saskatchewan that is now owned by UEC, or the Michelin project, which is owned by Paladin in Labrador. Not producing, within the next 8 to 10 years, but when it does produce, these will be some of the world's larger mines. But naturally, investors want to see visibility to near-term cash flow. So a lot of what we're doing is investing in companies that can meet this need for new production in this cycle. That's a pretty special group, because you've got to be a mine that's either on standby, that was shut in with that production discipline we talked about, or it's fully permitted and licensed, so the decision to move forward is purely commercial. And so hence we've tried to build our portfolio to have those kind of companies. And we also want very socially responsible and companies that really adhere to ESG principles as well. And that's a filter we run all our projects through. But very full pipeline right now. Full pipeline right now, where we're getting on the road again after COVID, being able to travel to Australia, Africa, and meeting with counterparties, and really see who we can add to the portfolio and give investors a little broader exposure.
Then we have another question, which is kind of touches on one that I got before the show. Espen put it like this: public and political perception seems low. which seems a good investment opportunity. Is it changing, or are we, prejudiced? But then I heard another person saying like this, that yeah, but it's not early. It's already run up a lot. If I share my screen here,
Yeah.
and if we're looking at, I mean, from the bottom, as you said, in 2016, we're already up from $14, $15, $16 up to $51 spot price.
Yeah.
But of course, if we look if you look at the historical longer perspective, it's apart from the peaks here in 2006, 2007, and in 2010, 2011, price is not that low actually. Have we already missed it? I guess could be the
no
question.
I mean, it's a common question, and it's a reasonable question, but I really think we still to use the baseball analogy, we're in the first inning of this bull market. And the reason I say that is, yeah, from 17 to $50 per pound is a big increase, 180%. But that level that it came from was, we mentioned that inefficiencies in the uranium market. We can go much lower than the incentive price for uranium than would normal economic theory would predict. But we can go a lot higher too. And also we have the big impact from inflation, where the thresholds for new mine production is probably $10 a pound higher for all producers globally today than it was even 5 or 6 years ago. And so, yeah, $50 is exciting. But to give you my conviction, at Uranium Royalty Corp, we've continued to make spot purchases of uranium at $50, $51 in the last 3 or 4 weeks, because we believe prices are going to 70, 80. And I think, again, we're going to need a lot more than just a few mines. I think our expectation is that even with the world's big established mines in Kazakhstan and Saskatchewan producing at full capacity, we probably need 8 to 10 new uranium mines developed in the second half of this decade. And we're very much within that lead time for new production to come online. So it really, speaks to those mines that can restart quickly or are fully permitted. But I think, we're going to need to have, fresh new mines break ground and come into production. And that lead time, may not, be able to really put a cap on the supply squeeze that we see in 2024, 5, and 6. And I think we also can't forget that uranium and nuclear power, the demand line is running away from us now, especially as we get into 2030 and we see hundreds, if not thousands, of SMRs ordered and built in the ensuing 10 to 20 years. We're going to need a lot more mines than the 190, 200 million pounds of annual global demand for uranium that we're seeing presently.
And I guess this is maybe a stupid question, but it's my question here, so I'll ask it. I guess since energy prices are up, right, and mining is energy intensive, I guess production costs go up because of that also, right? Then probably price goes up.
Yeah, I mean, especially big capital builds, and I think ISR mines, UEC is a little fortunate because we have existing infrastructure that's pre-inflationary dollars spent to build those operations. But if a developer needs to build a $1 billion mine and mill complex, it wouldn't be surprising if in today's dollars that's 1.5 billion. And so we could have a period where uranium prices are running quite significantly, yet we're not seeing, like you would see in copper, gold, silver, where price signals almost immediately stimulate additional production in those commodities. We're just not as efficient as those. So this inefficiency is horrible when the market's oversupplied, really the investor's friend in an undersupplied market, because all these factors tend to spin off of each other and push prices higher. And I think we're at the beginning of that. But, listen, uranium price is still at 50. I think that's a very attractive entry point. to longtime uranium investors, they've had to be patient, and many, were perhaps in early, but they have been rewarded by the returns to date, and the uranium equities have been, quite attractive and even kind of bucked the trend of the broader market.
Yeah, they've broken away already. I can see now with with the downturn that's been in most other markets. We have a few super good questions here. Let's try to fit them in also. Is the refinement industry ready to accommodate the growth that's expected to push the uranium price up?
Really great question. And the answer is, globally, we have enough capacity, but that's with assuming that, Russia supplied 40% of the world's enrichment needs. Enrichment is the process that takes the natural uranium, increases the U-235 isotope to usable levels in a reactor. And so, with the breakup of the Soviet Union, our industry was growing in the uranium, the refining, the conversion, and the enrichment was all growing to meet our own needs. But then I think we scaled back some of those growth plans to allow the entry of the Russians with Rosatom and Tenex and these Russian companies to supply into Western markets. We are moving away from that. Some countries like Sweden moved away from Russian supplies of nuclear fuel on the second day of the invasion. The U.S. has been a little slower, being so dependent. 20% of our enrichment comes from Russia. As I said, 50% of the uranium. It's been a little slower to ban or sanction Russian supplies, but it's coming. No one's signing new supplies. So this question is very insightful because we do need more refining conversion capacity. And I will say in the West, because I think we can rely on Canada, the United States, Western European countries can kind of form a supply security block in this regard. So we just need more uranium refining, conversion, and enrichment built in the Western world. And in the United States, we're seeing Congress really react to this need and proposing funding, cost sharing to accelerate the building of these facilities, these processing facilities. Also, I think a ban on Russian uranium, even if it came, 2027 or 2028, which is, from a humanitarian perspective, I find appalling because it's $1 billion of uranium a year from the United States going to Russia for nuclear fuel, which then, funds war activities in Ukraine. But even if it did come in 2028, but it was definitive and it had some lasting teeth to it, I think that would be an incentive for private industry or even some of these state-owned Dutch, British, French, and German companies to spend the capital to expand to meet that need.
Søren Benson is asking, could UEC consider going into the enrichment sector to enhance the value in production?
It's a great question as well. The answer is no. We do have other companies in our space. A big one is Cameco, which is fully integrating and becoming one of the world's greatest and biggest nuclear energy companies with uranium mining, conversion. They have enrichment technologies they're developing, and now they're buying Westinghouse, the nuclear fuel supplier and reactor vendor. And that's a very exciting strategy for Cameco, and I think it's going to work very well for them as they position as a nuclear energy company. For us, we want to be really leveraged to the underlying commodity. We want to be all about uranium and not really confuse the story for our investors. If you believe in the supply and demand of uranium and a significant increase in the uranium price in the coming years, we want to be fully leveraged to that story and not kind of dilute our activities with some of these other peripheral vertical integration.
Let's see if we can squeeze in one more great question here. Please discuss possible dangers and black swans. And I mean, all investors in almost all sectors the past couple of years have faced this at one point, that something very unexpected has happened. And that has come as an opportunity, and it has also come as a huge problem for many, but it can really be both. And if we can kind
Mhm.
of predict what could happen, it's maybe possible both to protect from those and also
Yeah.
take advantage of them from an investment perspective.
Yeah. Well, by definition, it's hard to define a black swan event, but we've seen a number of these, throughout the course of my career and before. You've had events like, 3 Mile Island, Chernobyl, Fukushima. Although, in Fukushima and 3 Mile Island's case, it's important to note that no one was injured or made sick by radiation from those accidents. Chernobyl, a little different story. So we're always guarding against, an accident at a reactor. But I think with each one of these events over the last, 60 years, we have learned how to make nuclear plants safer, how to make them more resilient. Fukushima, in retrospect, was a very easy defense against what happened there. Is better defenses against tsunami, flooding of the reactor, and just providing emergency offsite power would have just put the plant in a cold shutdown and have been the end of story. But we learned that in the United States after 9/11, where we hardened the nuclear power plants and their backup emergency supply systems to protect even against the most extreme terrorist attacks. So with each one of these events, the industry's gotten stronger and safer. I think with the advanced reactors and small modular reactors, that's clearly a selling point that they're really, and they're going to get new converts to the technology by demonstrating even safer operations. So that's kind of on the negative side. If we obviously watch very closely in Ukraine to ensure that Russia and their reckless actions, they've now seized the Ukrainian nuclear power plant Zaporizhia and operating it and forcing the Ukrainians to operate it. That's definitely not something we like to see happening. But I think going forward, there's nothing to say that the black swan events don't work to the upside. And I think in an undersupplied market where we have really no cushion of inventories right now, in the past we've had big mines in Canada suffer from flooding or inflows and kind of supply disruptions at BHP at the Olympic Dam mine in Australia. We've seen a major smelter fire that shut those operations down. We've seen COVID knock mines offline for a period of time, but we can't afford to have any of those type of supply disruptions now. We need all the production we can get and even then some going forward. So the black swan doesn't always necessarily need to be a negative event, but can be positive for the supply and demand.
I mean, touching on that here, Ellen is asking, why would you say Japan is going back to nuclear after? I mean, it's pretty recent, Fukushima.
Yeah. So they, listen, one of the lessons learned was the Japanese regulatory bodies were far too comfortable and cozy with industry and really didn't serve the public interest of good, solid regulation that we would be used to in Western Europe or the United States. And so we have European countries and the United States have really worked with Japan to develop more of a nuclear regulatory commission type of regulation, which balances interests, but really protects against these events going forward. I think Japan's taken it now to the extreme and overly cautious on regulation, which has caused the restart of reactors to be slower than we hoped. But we've now got a little over 10 reactors restarted in Japan. We'll go back to a number of about 30 in total. And so over the next 3, 4, 5 years, we'll begin to see reactors come back online. Why? They have no other choice. They're an island nation that doesn't, without abundant gas resources, coal resources, they're having to import liquefied natural gas, importing coal from Indonesia and elsewhere. And it's been very expensive and it's impacted their balance of trade. So Japanese industry that's so dependent on low energy and available energy supplies, low price and available energy supplies to power a manufacturing export economy, they can't afford to have expensive or unreliable energy, and that's been the case. So They're lobbying very hard for the reactors to come online, but ultimately it falls to public opinion. And it's interesting to note that more recent public opinion polling has shown that now more than 50% of Japanese people realize that these reactors need to be restarted to provide energy security. And that's the reality of everywhere in the world today. We have growing and increasing energy needs. They're having to be cleaner energy, and that's creating a very challenging transition for us. The energy has to come from somewhere, and there's pros and cons of each energy source. But we're finding that nuclear, even in Japan,
like, I mean, we talked about no one was injured in any of these recent incidents, but
yeah,
I mean, if we compare how many died from lung disease from all the burning of coal in the world, if we would kind of put those next to each other, I mean, everything has some risks. If I go out on the street, Sweden is one of the safest places on the earth. But if I go out on the street, I might get run over by a bus. But I still need to do something. I still need to get out.
Yeah.
So it's about what
and
the
that's
choices
true. I mean,
are.
coal-powered electricity, is estimated to have caused millions of premature deaths, especially in the developing world where there's less scrubbers or air quality. If anyone's visited Delhi or Mumbai or Beijing or Shanghai,
I lived in many of the big cities in Asia, and it was actually maybe the number one reason we moved back to Sweden, because the air quality from all the fossil fuel burning is actually becomes a real problem. And I'm not finicky about anything, but when you are outside the city and you see it from far and it's like a cloud over the city on a clear day, I realize I'm actually going to take my children into the middle of that one. That's where we live. That's
well, and it's energy policy is, yes, it's a key element of economic activity and economic success of a country or a region, but it is quality of life and it is health and safety. And that's why, when we pass policies, this isn't banning plastic bags or plastic straws. This is energy policy. And so it's so important that we really look at it from a science and math and practical perspective and less on the ideology, or we're destined to fail. And the consequences are quite severe, and we're beginning to see.
So too. It kind of, the problem here with public perception is that when something goes wrong with nuclear, it becomes one big event, and people remember it for 40 years afterwards. While the problem with the alternative, just keep burning oil and gasoline, it's kind of, you don't notice it every day. It's something that kind of creeps on all the time, and it kind of fades into the background. You don't think about it so much, but actually it's much more dangerous. And I would love to see all these amazing Asian cities transition to electricity-based transport and industries instead. I think it would be better for everyone, and the total amount of deaths would drop drastically. So
well, it's not surprising the fastest growing market is China. I mean, they are adding 3 to 4 units to the grid every year. They will surpass the US as the largest nuclear power country within this decade. India has similar aspirations and similar programs, but even in places like in the Middle East and that is oil rich, the United Arab Emirates has just built 4 very large reactors built by the Koreans, very successfully, on budget, on time, and to a point where one of the world's largest oil producers will be one of the cleanest countries in terms of carbon emissions and have plenty of energy for industry. They're not mutually exclusive. You can still have energy and still have it clean and still have it affordable.
So I think you are doing an enormous service for the whole world, for the future. Thank you for everything you have done, everything you are doing for this industry and for the world, Scott. And thank you for being on the show. And I promised to ask the question. So are you bullish on the uranium sector?
Listen, I think it's the best positioned commodity in the world today for so many of these supply and demand reasons, and the mega trends and the geopolitical events. So I would encourage your viewers to, if they haven't established a position in uranium, it's not too late. We're in the first inning of this. I just left a big institutional investor conference with the big hedge funds and pension funds and family offices who are, going overweight in their positions of uranium based on the outlook. So you've got good companies. Some of the biggest investors in the world are all bullish on uranium these days. So we believe the retail investor will also benefit from that. So thank you for being able to tell the story today. And again, it's exciting times.
Thank you so much, and thank you for staying a little over time here, Ivan. It was delightful. I learned a lot, and I hope you all learned a lot. Thank you, and tack. That's Swedish for thank you.
Tack. Tack så mycket.